A very good evening to all my dear friends out there. At the outset, I would like to thank the entire team of Taxmann for giving me this another wonderful opportunity to be a part of this wonderful initiative for our today's webinar. And the topic of our today's webinar, that is the TCS on remittances under Liberalized Remittance Scheme, LRS, as well as overseas tour packages, is a very important and practically relevant one. And more importantly, the timing of this webinar is very crucial and useful, because currently in majority of the schools, the summer vacations have started. So many of you would be planning your foreign trips or overseas tours. So today's webinar will be of great practical relevance to all of you. And another thing also for the professionals also, we all know that the government of UAE has introduced corporate tax in the UAE starting with effect from 1st of June 2023. So many of the professionals are thinking about collaborating and working on working out ventures for this new territory, that is the UAE corporate tax. So they may also be planning their trips in Dubai. So all in all, our today's webinar, I am confident that is going to be very relevant and useful for all the stakeholders concerned. So I have prepared one PPT also, and I would be sharing my PPT. I hope my screen is visible to all in the slide mode.
Sir. Yes, sir.
Okay, Komalji. Yeah, thanks. Komalji, my first screen is visible. That is coverage of the presentation.
Yes, sir.
Okay. Yeah, let us proceed now. So friends, in our today's presentation, the topics which we'll be discussing are that overview of the amendments in section 206C 1G, that is the TCS related section on foreign remittances under LRS and overseas tour packages. Then what are the practical implications of such amendments? Then the incidental thing is the overview of the amendments in FEMA current account transaction rules 2000, and what are the practical implications of those amendments. Then specifically TCS on foreign remittances under liberalized remittance scheme. So what is exactly liberalized remittance scheme? What all remittances are covered in the scheme, and how the TCS provisions are going to affect those remittances. Similarly, for education purposes abroad, for medical treatment abroad, and for overseas tour packages, the applicability of TCS and the recent amendments in the Finance Act 2023. We'll all be discussing all these things thoroughly and with practical examples also. So also we'll be discussing the utilization of TCS credit while filing ITRs and the interest on refunds arising out of TCS, and TCS on foreign remittances for other purposes also, like your investments in foreign shares, bonds and securities, etc. So with this, let us begin our presentation. Friends, Finance Act 2020 has introduced a new subsection 1G in section 206C in the Income Tax Act, and which stipulates that TCS or the tax collected at source has to be collected by an authorized dealer on all foreign remittances made by a buyer under the liberalized remittance scheme, that is LRS of RBI, and overseas tour packages, including overseas travels, hotels, lodging and boarding expenses. So friends, this subsection is not new. This was introduced in 2020 itself. However, the Finance Act 2023 has increased the rate of TCS on certain remittances, which we will be discussing very shortly in detail. So such TCS is to be collected by the AD, that is the authorized dealer. And what is the timing of this collection? Either the section provides that either at the time of debiting the amount payable by the buyer, or at the time of receipt of such amount from the said buyer, whichever is earlier. So either at the time of invoice raising by the authorized dealer, or at the time of remittance, whichever is earlier, the TCS has to be collected by the authorized dealer. And for the purpose of section 206C subsection 1G, authorized dealer has been defined in this particular explanation to subsection 1G itself, and it means a person authorized by the Reserve Bank of India under subsection 1 of section 10 of the Foreign Exchange Management Act 1999 to deal in foreign exchange or foreign security. So specifically, your bankers who are doing foreign remittance on through which you are doing your foreign remittances, your international credit card or the debit card banks, issuing banks, as well as the authorized money changers also, or the tour operators, foreign tour operators, all fall in the definition of authorized dealer. And the section also specifically defines an overseas tour program as means any tour package which offers visit to a country or countries or territories outside India and includes expenses for travel or hotel stay or boarding or lodging or any other expenditure of similar nature or in relation thereto. So this is self-explanatory. The definition itself is given in the section itself. Let us proceed further. Friends, first of all, since this subsection 1G in 206C is on foreign remittances under liberalized remittance scheme, so it is but essential for us to first understand what all remittances are being covered under this liberalized remittance scheme of RBI and what exactly is this scheme. So under the liberalized remittance scheme of RBI, the authorized dealers are allowed to permit the resident individuals to freely make remittances outside India up to USD 2,50,000 per financial year, that is April from March, for any permitted current or capital account transaction or a combination of both. So there are certain permissible current and capital account transactions. So either current or capital or a combination of both transactions for making remittances for these purposes. The liberalized remittance scheme provides that the resident individuals are allowed to remit up to USD 2,50,000 per financial year without the approval of Reserve Bank of India. And for making remittances in excess of the specified limit of USD 2,50,000, the permission of RBI or the prior approval of RBI is required, is mandatorily required. Friends, let me clarify here that this liberalized remittance scheme talks about Schedule 3 of the FEMA CAT Rules 2000. That is FEMA Current Account Transactions Rule 2000. There are three schedules: Schedule 1, Schedule 2, and Schedule 3 in FEMA Current Account Transactions Rule 2000. Schedule 1 transactions are not permissible at all. They are prohibited. Remittances cannot be made. Schedule 2 are can be remittances under Schedule 2. Transactions can be done after getting the prior approval of RBI. And Schedule 3 transactions basically cover these liberalized remittance transactions or the remittances for which up till the specified limit of USD 2,50,000 in a financial year per resident individual, the said resident individual is not required to take any prior approval from the Reserve Bank of India. And friends, for the scheme is available to all resident individuals, including minors. However, a specified Form A2 is to be furnished by all such resident individuals to the authorized dealers before making such remittances. And such Form A2 specific details are to be provided, like your PAN number, the specific purpose of the remittance, and how this remittance is being covered by LRS, under which clause this LRS remittance is being covered. So Form A2 is to be mandatorily furnished by such resident individuals before exchanging, before making a foreign exchange of the respective country with the authorized dealer or the money changer. And friends, in respect of minors, such Form A2 must be countersigned by the minor's natural guardian. Friends, this liberalized remittance scheme also provides that remittances under in respect of family members subject to individual family members complying with its terms and conditions. However, clubbing is not permitted by other family members for capital account transactions, such as opening a bank account or investments in foreign country, if they are not the co-owners or co-partners of the overseas bank account or the investments. So friends, here the specified limit of USD 2,50,000 for the LRS purposes if suppose 4 members are there in the family, so all of 4 are going abroad on the same trip, then obviously all 4 may up their individual remittance limit up to USD 250,000 rupees. So which means USD 250,000 to 10 lakh per financial year they can make use of by declaring this and by clubbing their individual limits. However, friends, let us be clear here that this limit is only for LRS remittance purposes of 250,000 as per RBI guidelines, and this limit cannot be availed of as far as this TCS threshold limit of 7 lakhs is concerned. We will be discussing this threshold exemption limit of 7 lakh also in our ensuing slides very shortly. But this limit, this clubbing facility of family members is permissible only as far as this USD 250,000 USD remittance limit is concerned, and not for the TCS purpose under Section 206C(1)(g) of the Income Tax Act. Friends, currently, one very important amendment has also come up in the master directions of the RBI. You should go through the master direction. It is very informative, very insightful, and very useful for practical understanding of the TCS provisions also. Earlier, there was no limit. Once a resident individual has made some remittances towards LRS, then no matter how that there was no specified time period by when those remittances are to be utilized or further reinvested. But now, in order to prevent misuse, a specific time period of 180 days, that is 6 months from the date of such remittance, has been specifically prescribed. And for the recently, 28th February 2023 was one of the last date for such remittances for either reinvestment of such remittances under LRS or repatriating it back to the authorized dealer in India. And those who have not done so are maybe received are amenable to receive notices also. Friends, as we have discussed that the LRS remittance is both towards permissible current account transactions as well as the capital account transactions. So now, what are those permissible current account transactions? Here also, RBI guidelines or the master direction is very clear. And as per Rule 5 of the FEMA Current Account Transactions Rule 2000, resident individuals can avail foreign exchange facility for the following purposes, as detailed in Schedule 3 of the rules, as I have already mentioned, Schedule 3, within the permissible LRS limit of US 250,000 in a financial year without the prior approval of RBI. Friends, there are 8 broad categories, that is private or personal visits to any country except Nepal and Bhutan. Friends, here we should know that this Nepal and Bhutan foreign trips are not covered either by Schedule 3, but that doesn't mean that Nepal and Bhutan are being given any relaxation or any concessional treatment. In fact, the remittances in Nepal and Bhutan are not permissible at all and prohibited under Schedule 1 of the FAMCAT Rules 2000. So that is why this exception has been specifically carved out, and private visits to any country other than Nepal and Bhutan, the remittances towards such private or personal trips will be covered by LRS, subject to the overall limit of USD 250,000 in a financial year. Then the second category is making gifts or donations abroad. Such gifts can be made by resident individuals to their close relatives abroad, or donations can also be made to certain organizations in the foreign country. So within the overall permissible limit of USD 250,000 in a financial year, those are also permissible as per the current account transactions. Then going abroad for employment is also permissible, subject to the USD 250,000 overall limit. Then emigration also is possible. Maintenance of close relatives abroad is also, remittances towards maintenance of close relatives abroad is also permissible. Relatives also has been specifically defined as per Section 2, subsection 77 of the Companies Act. In the next slide, we will be discussing that also. And business travels, including conferences, are also covered within the purview of LRS. We will be discussing this dicey issue also very shortly, that what all business travels are covered in TCS provisions and what all business travels are not covered. Education abroad and medical treatment abroad. So broadly, these 8 categories are there specified, and any other permissible current account transactions is also covered under the LRS. Now coming to the definition of relative, section 2 subsection 77 of the Companies Act defines the word relative as relative with reference to any person, means anyone who is related to another if they are members of Hindu undivided family, they are husband and wife, or a person is related to other in such manner as may be prescribed. Then rule 4 of the company's specification of definition detail rules 2014 also provides that relative includes father, including stepfather, mother, including stepmother, son, including stepson, daughter, including daughter and daughter's husband, and brother, including stepbrother, and sister, including stepsister. So blood relatives are covered, and linear ascendant and descendant are also covered within the definition of relative. And what are the permissible capital account transactions by an individual under LRS? The opening of the foreign currency account abroad with a bank, acquisition of immovable property abroad, overseas direct investments, that is ODI, and overseas portfolio investment, OPI, in accordance with the provisions contained in Foreign Exchange Management Overseas Investment Rules 2022, Foreign Exchange Management Overseas Investment Regulation 2022, and Foreign Exchange Management Overseas Investments Directions 2022. So friends, here it is important to understand that although a broad permissible limit is of 250,000 USD is permissible without the prior approval of RBI, but having said that, then also specifically for these specified capital account transactions like acquisition of immovable property or overseas direct investment or overseas portfolio investments, the respective directions and the guidelines and the rules and regulations as specified in these specific FEMA rules and regulations have to be followed. And extending loans, including loans in Indian rupees to non-resident Indians who are relatives as defined in Companies Act 2013. We have already discussed section 2, subsection 77. So I hope I am clear up till now. Just let me know in chat also. You can write. Okay, my voice is clear or not? Somebody mentioned that my voice was not clear. Okay, thank you. Let us proceed further. Okay, Ayushi is writing 111% clear, sir. Thank you. चलिए आगे बढ़ते हैं. Now, friends, coming to the practical aspect, that is, what are the existing income tax provisions as far as this TCS on foreign remittance under LRS is concerned? Friends, I have already mentioned that Finance Act 2022 inserted a new subsection 1G in section 206C with effect from financial year 2021 onwards. However, the existing subsection provided an overall exemption limit of threshold exemption limit of rupees 7 lakhs in a financial year per resident individual. Friends, it is very important that this exemption limit of 7 lakhs is per resident individual, that is per PAN number, and it is not your per authorized dealer or per remittance. It is not per remittance, or neither it is per authorized dealer. It is per residence. The remittances, the aggregate remittances of a particular resident individual as per his PAN in a financial year, the exemption limit of 7 lakhs is already there on TCS on LRS remittances. And now the existing provisions of subsection 1G are applicable up till 30th of June 2023. Today is 5th of June. So up till 30th of June 2023, the existing provisions and the existing rate will apply with effect from 1st of July 2023. The new TCS rate and some new threshold limit will be applicable, which we will be discussing very shortly. Firstly, existing rule. TCS is to be collected by authorized dealer, which are typically the bankers or the credit or the debit card issuing bank or your money changer. That is 5% on LRS remittances of resident individuals exceeding rupees 7 lakhs in a year up to 30th of June 2023. So overall, the 7 lakh exemption limit in respect of all LRS remittances, which we have already discussed, permissible current account transactions as well as capital account transactions. The exemption limit of threshold exemption limit of 7 lakhs is available up till 30th of June 2023, and the excess of the 7 lakh transactions towards the LRS remittances will be subject to TCS at the rate of 5% up till 30th of June 2023. So friends, these LRS remittances also, apart from the current account, permissible current account transaction of those 8 categories, in 7th and 8th category, we have discussed that LRS remittances for the purpose of education abroad. So education abroad also has two further bifurcations. That is, the remittances are being made out of own funds, out of the resident individual's own funds, or out of the loans from approved financial institutions. So if the remittances towards education abroad are out of loans from approved financial institutions, then a concessional TCS rate of 0.5% is applicable up till 30th of June 2023. After 1st of July 2023, what will happen? This will also discuss in next slide. But as of now, 30th up till 30th of June 2023, the LRS remittances for the purposes of education abroad through loan from approved financial institutions are subject to a concessional TCS rate of 0.5% only. The other remittances made for education purposes abroad, that is from own funds and not from loan from approved financial institutions, are subject to a TCS rate of 5%. Okay. And in respect of medical treatment abroad also, the rate of TCS is 5% only. And and here there is no such bifurcation that whether the medical treatment is out of loan or not, out of any sources, out of own funds or out of loan funds. The medical treatment abroad is subject to TCS at the rate of 5% as up till 30th of June 2023. Now, section 206C, subsection 1G has two limbs. Firstly, the LRS remittances, and second limb specifically talks about the overseas tour packages remittances. So if any resident individual is making any remittances towards purchasing overseas tour packages, then the existing provision requires collection of TCS at the rate of 5% by the tour operator without any exemption threshold limit up to 30th of June 2023. So up to 30th of June 2023, if, as I have already mentioned, that summer vacations are going on, and so many of you may be planning some foreign country or foreign travel visits. So it is the best time to book your foreign or overseas tour package before 30th of June 2023, because on up till 30th of June 2023, the reduced TCS rate of 5% is applicable on overseas tour packages. With effect from 1st of July 2023, this TCS rate is going to increase substantially to 20%. We will be discussing this aspect very in detail in the coming slide. So it is the best time. Those who are still planning, it is in their best interest in order to make their such foreign trips cost effective and viable, to book such tours within 30th of June 2023, so as to avail the lower TCS rate of 5%. Komal, my next the screen is visible. Current budget 2023 amendments.
Yes, sir. This is visible.
Okay, thank you.
Yeah.
So friends, now coming to the amendments, important amendments. The Finance Act 2023 has increased the TCS rate on foreign remittances made under LRS, other than towards medical treatment abroad and education abroad, like your investments in shares, bonds, and securities abroad, donations, gifts, and living expenses of relatives abroad, and on overseas tour packages from the existing 5% to 20% with effect from 1st of July 2023. And there is no threshold exemption limit in respect of such remittances. So as I was discussing, that this increase is a substantial one. From 5% to 20%, the rate of TCS has been increased with effect from 1st of July 2023. And more specifically, there is no threshold exemption limit in respect of LRS remittances other than towards medical treatment and education purposes, and towards overseas tour packages. There is no exemption threshold limit of 7 lakhs. So with effect from 1st of July 2023, even a single dollar will incur 20% TCS, and that will result in extra. Obviously, that is going to increase your costs, foreign costs, traveling costs. But however, the rate of TCS for foreign remittances for education and medical treatment abroad has been kept same at 5%. That is 5% for both education and medical treatment. And further, there were two bifurcations in education. Out of own funds, the rate of 5% remains same, that is 5%. Even after 1st of July 2023, the rate remains 5% only. And in education, the second bifurcation, that is out of loan from approved financial institutions under Section 80E of the Income Tax Act, then the concessional rate of 0.5% still remains intact. So those remittances towards education and medical treatment abroad, no change has been prescribed in the Finance Act. The same rate of 5% or 0.5%, as the case may be, will remain applicable even for all the remittances on or after 1st of July 2023. And in fact, the threshold aggregate limit of 7 lakhs per financial year per resident individual also remains as it is. So there is no change in that thing. As far as LRS remittances towards medical treatment abroad and education abroad are concerned. However, I am again repeating that other remittances, LRS remittances, other than education abroad and medical treatment abroad, earlier the threshold limit of 7 lakhs was there. But now this threshold exemption limit of 7 lakhs has been done away with. Earlier, the rate was 5%. Now, for other LRS remittances other than education and medical treatment abroad, the rate of TCS has been increased from 5% to 20% for all remittances on or after 1st of July 2023 onwards. I hope I am clear up till now. Questions are being asked that the TCS is applicable for business trip. I will answer all these questions at the end of our session so that our continuity is not broken. Okay. Okay, let us proceed further. Friends, although this is not specifically the budget 2023 amendment in respect of international credit card spends, but in the during the presentation of the budget, our Honorable Finance Minister Srimati Nirmala Sitharaman ji has categorically said this before the Parliament that there was a perceived lacuna in the law that foreign spends made through international credit cards were outside the purview of LRS remittances, and that is why TCS was not applicable. So it was a perceived perception that the overall TCS, LRS limit of 2,50,000 was often breached by using this via media of international credit card payments. So in order to curb that lacuna, now the specific Rule 7 of FEMA Current Account Transaction Rule 2000 has been omitted. So friends, this with effect from on 16th of May 2023, this RBI notification has come up by which the Rule 7 of FEMA CAT Rules 2000 has been omitted. And earlier, this Rule 7 specifically exempted the foreign spends made via international credit cards while on a visits abroad by resident individuals outside the ambit or the purview of LRS limit of USD 2,50,000. And incidentally, as a natural corollary, since Section 206C, subsection 1G only applies towards LRS remittances, therefore, since the international credit card spends made by resident individuals while on their foreign travels was outside the scope of LRS limit, therefore, TCS was also not applicable. But now, these payments, foreign spends made by international credit cards while on visits abroad has also been covered within the purview of LRS limit. And incidentally, now TCS at the rate of 20% and in some cases 5% also will be applicable with effect from 16th of May 2023 onwards. So with effect from 16th of May 2023 up till 30th of June 2023, the rate of TCS on such foreign spends made through international credit cards will be 5%. But after, for remittances on or after 1st of July, the rate may become 20% in cases of other remittances other than the education and medical treatment abroad. However, for medical treatment abroad or the education abroad, related expenses, if those expenses are being made through international debit or credit cards while on a foreign visit, while on that respective country visit, then the TCS is applicable, and TCS rate will become 20% with effect from 1st of July, other than education and medical treatment abroad. For medical treatment and education abroad, the TCS rate will remain 5% as was before. Earlier, however, the international credit cards were outside the purview, but now international credit card spends while on a foreign visit towards any purpose have been brought under the purview, subject to the overall exemption threshold limit of 7 lakhs. I have prepared some tables also. We will be discussing all these nitty-gritties by way of ready reference table also for better clarity. And so this was all about this new omission of Rule 7 and its incidental impact on the TCS applicability. And friends, as soon as on 16th of May 2023, this announcement was being made. So obviously, some genuine concerns were being raised by all quarters, and therefore, in order to give some leeway to those genuine concerns, on 19th of May 2023, CBDT has issued a press release, and by which it has specified that for payments made through international credit and debit cards by resident individuals while on their visits abroad, the threshold exemption limit of 7 lakhs, as is applicable for foreign remittances towards education treatment abroad or medical treatment abroad, will also be applicable. So those small foreign spends in international debit or credit cards up to 7 lakhs per financial year per resident individual have been made outside the TCS collection criteria. Friends, here we should understand here that currently this exemption limit of 7 lakhs has only been specified in respect of foreign spends made through international debit cards and credit cards, and not through any other mode, be it your directly exchange from money exchanger. If you are on a visit abroad and you directly exchange, make some exchanges by foreign authorized money changers, or through forex cards or to travel cards, then this exemption threshold limit of 7 lakhs currently has not been provided. But I think that uh, uh, there is some this has been overlooked or skipped out of inadvertently, because there should not be any distinguishing or the differential treatment as far as the mode is concerned. So I think and I hope that the government will take cognizance of this differentiating thing as vis-a-vis the international debit cards and international credit cards and debit cards vis-a-vis the forex cards and travel cards and other payment modes. The 7 lakh limit should be provided as was there up till 30th of June 2023. Friends, my table is visible. Okay. I'm again requesting the participants to raise your questions. We will discussing all your questions in the last 15 minutes or so. But let us just proceed with our presentation now. This table, for your ready reference, I have prepared this table also. And firstly, for education purpose, for the TCS exemption limit of 7 lakhs per financial year is there, and the LRS limit of USD 2,50,000 is there. And for if the remittance is out of loan obtained from an approved financial institution, the TCS rate is 0.5%, both for the period prior and up to 30th of June 2023 and on or after 1st of July 2023, the concessional rate of 0.5% remain as it is. There is no change in that, so no need to worry about it. Similarly, if the remittance towards education abroad has been made out of own funds and not out of loan from approved financial institutions, then the earlier rate of 5% still remain as it is, and the threshold exemption limit of 7 lakhs still remain as it is. There is no change. Okay. Friends, one very important and significant clarification has been given in the FAQ issued by the CBDT. That is, what about obviously direct fees of the foreign institutional bodies or to educational bodies are covered by the LRS limit, and the exemption threshold limit of 7 lakhs is there. But and the rate of 5% is there, and or the 0.5% is there. But what about those remittances which are indirect and not directly made to the educational institution? So the FAQ clarifies that remittance towards indirect travel and incidental expenses related to education and medical treatment abroad, subject to the furnishing of documentary evidences, will also be subject to the concessional TCS rate of 5% or 0.5% only, and not the higher 20% applicable for residual LRS remittances. So if the resident individual is able to establish that the foreign remittance is incidental towards the medical treatment abroad or towards education abroad, by furnishing of documentary evidences to the authorized dealer, then the authorized dealer is authorized to deduct to collect TCS at 5% or 0.5% only, and not at 20%. The bona fide, and the FAQ also clarifies that the bona fide of such transactions may be looked upon, verified by the authorized dealer itself and not by the RBI. Okay. So suppose, for instance, some direct fees, tuition fee, the education fees or the institutional fees is being remitted, but in addition to that, the hostel fees, hostel expenditure, or the living expenses of the daughter or son dependent who is relative abroad is also being met, and within the overall permissible limit of 2,50,000 USD, the threshold exemption limit of 7 lakhs will be applicable on such remittances also, and the concessional TCS rate of 5% will also be applicable on such incidental remittances towards medical treatment or foreign education abroad, and the higher TCS rate of 20% will not be applicable. Medical treatment abroad also, I have mentioned that up to 7 lakhs per financial year, the exemption threshold limit is there, and the permissible LRS limit is USD 2,50,000. TCS rate remains same, both for 30th of June 2023 as well as on or after 1st of July 2023 also, that 5% only. 20% rate is not applicable as far as the remittances towards medical treatment abroad is there. And friends, this I have tabulated this specifically because if you will go through the master direction, RBI master direction on LRS, you will come to know what exactly are the benefits available under all these 8 categories of specific heads. So it is quite natural for us that we just read the commentary and the internet thing, but you should also go through the specific RBI master directions, because some specific benefits are also there, specifically mentioned. So since those benefits are there available for LRS payments and the limit of threshold limit of 2,50,000 LRS, therefore the TCS benefit of 5% will also be applicable on such things. So it has been provided that authorized dealers may release foreign exchange up to an amount of USD 2,50,000 or its equivalent per financial year without insisting on any estimate from hospital doctor. For amount exceeding the above limit, authorized dealers may release foreign exchange under general permission based on the estimate from doctor in India or hospital doctor abroad. So this is particularly to the USD 2,50,000 may also get crossed if the estimate is there from the authorized doctor. However, the TCS criteria will remain the same. The exemption limit will remain same as 7 lakhs, and the 5% rate will there. So even if the USD, if the remittance limit exceeds 2,50,000, but subject to the approval criteria of estimate by the authorized doctor, then also the TCS rate will remain 5% and not 20%. And similarly, the RBI direction specifically provides that a person who has fallen sick after proceeding abroad may also be released foreign exchange by an authorized dealer without seeking prior approval from the Reserve Bank for medical treatment outside abroad. So it may also happen that a person is already there on a foreign visit, and when he is already there in a foreign visit, there he gets sick. And if on getting sick after being there in a foreign visit, then and he incurs some expenditure, then for those spends, the relaxation or the reduced TCS rate of 5% will be applicable, and the threshold exemption limit of 7 lakhs will also be applicable. So this is an important addition, which generally is not there in the internet or the commentaries. Friends, Specifically, these 8 categories I have specifically tabulated because very often we all just talk about foreign travels, overseas tour packages, education abroad, but not our other specified remaining 5 categories, that is going abroad on employment. If a person is going abroad on employment, then also the TCS rate of 5% has increased from 20% because it falls in the residual criteria of the LRS remittances other than education, treatment abroad, and medical treatment abroad. Immigration also, the rate has been increased from 5% to 20% with effect from 1st of July 2023. Gifts also, a resident individual can make a rupee gift to an NRI who is relative of the resident individual by way of cross-check or electronic transfer. The amount should be credited to NRO account only, and a resident cannot gift to another resident in foreign currency for the credit of the latest foreign currency account held abroad under LRS. Because in initial discussions, I have heard that some way was being worked out that the relatives who are residing abroad already can make payments towards such tour packages or residual LRS remittances themselves, and then some gifts can be made to those relatives. But specifically, the gifts itself are covered under LRS remittances, and on each and every gift without any threshold exemption limit, the rate of TCS is 20%. Earlier, the threshold limit of 7 lakhs was there in respect of residual category of remittances also under LRS, but with effect from 1st of July 2023 onwards, the residual category of LRS remittances, including gifts, including investments in stock shares and other securities abroad or real estate transactions abroad, will have no threshold exemption limit of 7 lakhs, and the rate of TCS has increased to 20%. Similarly, loans also, the loans by resident individuals to foreign relatives abroad or to anyone abroad are subject to TCS at the higher rate of 20% with effect from 1st of July 2023, and the threshold limit is not there in respect of residual category. All these are residual category, investments in shares, bond securities, donations abroad, business trips. Now coming to the business trips, it is also very important because some confusion is there as far as this business trips is concerned. And this confusion has arisen because in the FAQ itself, and in fact in the master direction also of the RBI earlier also, it has been categorically provided that the business trips by employees, business trips undertaken by employees on behalf of employers are outside the purview of TCS, in fact, outside the purview of LRS remittance also. So it has been clarified in the master direction of RBI itself that business trips undertaken by employees on behalf of their employer companies are outside the purview of LRS permissible limit of 250,000. So incidentally, they're also outside the purview of TCS applicability. But having said it, there is a differentiation. I don't know, or I personally speaking, I am not able to digest this differentiating thing. That when a business trip is undertaken by a proprietor businessman in his individual capacity, then no relaxation is there. Then these are covered. These are considered as residual category of LRS remittances. And earlier, on up till 30th of June 2023, these were subject to the TCS rate of 5%. But on or after 1st of July 2023, these will be subject to a higher TCS rate of 20%. That is business trips by resident individuals themselves in their individual capacity, in the capacity of proprietor businessmen. So those have not been exempted. So the bifurcation is not there. Only the business trips undertaken by employees on behalf of their employers have been kept outside. Okay. I hope I am clear up till now. Okay, let us proceed further. Now coming to the most dicey thing, that is the private or the personal visits to foreign countries other than Nepal and Bhutan or overseas tour packages. Friends, let me clarify here that the LRS permissible current account transactions, which we have already discussed in our earlier slides, cover within itself, within the first point itself, it covers the personal or the private visits to foreign countries other than Nepal and Bhutan. So automatically overseas tour packages are covered in the LRS remittance also. But having said it, section 206C subsection 1G has two limbs. First is all LRS remittances, and specifically the second limb is towards overseas tour packages. So if the remittances are specifically towards overseas tour packages, then and are made to a foreign tour operator or the Indian tour operator, then such that the TCS subsection 1G carves out an exceptional rate, carves out an increased rate. Earlier the rate was 5% only, but earlier the carving out was there up till 30th of June 2023, because the legislative intent was not to provide the threshold exemption limit of 7 lakhs, because the threshold exemption limit of 7 lakhs was applicable in respect of all LRS remittances other than those towards overseas tour packages. So the carve out was only with respect to the exemption threshold limit, the denial of exemption threshold limit of 7 lakhs to overseas tour packages for remittances made on or up till 30th of June 2023. But now this differentiation is on two accounts. With effect from 1st of July 2023, all remittances made towards overseas tour packages, towards purchase of overseas tour packages, will have two impacts. Firstly, no exemption threshold limit of 7 lakhs is applicable. Secondly, and more importantly, the TCS rate has increased substantially from 5% to 20%. So, if the remittance is towards overseas tour packages, then the TCS rate, irrespective of the fact that such remittances are also covered under LRS remittances, the TCS rate will be 20% and not 5%, and no exemption threshold limit of 7 lakhs is there. So if you purchase overseas tour packages from Indian tour operators, then on or up to 30th of June 2023, the TCS rate of concessional TCS rate of 5% is applicable without any exemption threshold limit. But if you make any payment or purchases on or after 1st of July 2023, then the additional 15% TCS cost has to be borne by you. Okay. So here also another tricky question is there, that suppose overseas tour packages transactions purchases are covered and are subject to a higher TCS rate of 20% and earlier 5% also. But currently also, that is as per the existing provisions also, I have studied and I have read that if the transactions, if such remittances or the payments towards foreign travels are being made not towards an overseas tour package, but towards individual air ticketing or booking of hotel tickets from various websites like Make My Trip or such similar websites, then I have been made to believe that TCS is not applicable. I have spoken with some tour operators also, and I have done some earlier regions, so some transactions also. But in my humble understanding, if such transactions are being undertaken directly from a website, from suppose air tickets are directly being booked from Air India or some similar other international flights, and the hotel bookings are done directly from such websites, then I think that currently TCS is not applicable. I may be wrong, but this is a dicey issue. But as far as my understanding is concerned, currently TCS is not applicable if such foreign costs towards lodging, boarding, and travel are being made while in India and directly through such websites. So friends, I have just for ready reference, this time the CBTT has been proactive in its approach and have on its official Twitter handle as well as in other official domains, social media, various clarifications have been given. So, but we have discussed. I have just for ready reference, because since PPT will be shared with all of you, so I have compiled all these in within this single PPT for a ready reference. But no need to repeat itself. Yeah, the numbers are there. Under the LRS in the financial year 21-22, a total of USD 19.61 billion was remitted, rising from USD 12.68 billion in 2021. In 2023, it rose to more than USD 24 billion, of which overseas travel accounted for more than half. So basically, this substantial rise of more than 50% of LRS remittances to overseas travel has probably been the triggering factor for increase in this TCS rate from 5% to 20%. So the government wants to promote domestic tourism, and obviously that is why the TCS rate on overseas tour packages has been increased substantially from 5% to 20%. So this we have already discussed. Rule 5, these 8 categories of current account permissible transactions which are covered in LRS. The link of this master direction is also there. So you should go through this link also. It is very insightful. What is current account transaction also? Current account transaction definition is also important. It is given in the FEMA Act itself. That is payments due in connection with foreign trade, other current business services, and short-term banking and credit facilities in the ordinary course of business. Payments due as interest on loans and as net income from investments. Remittances for living expenses of parents, spouse, and children residing abroad. Expenses in connection with foreign travel, education, and medical care of parents, spouse, and children. So these are the defined current account transactions. And this definition is very important, friends, because a question has come up that now, even in some quarters, some apprehensions have been raised that even if while residing in India, if we are making some payments through our debit cards or credit cards, either through international credit card or international debit card, or through domestic credit or debit cards also, towards some subscription towards some foreign domiciled digital platforms like your LinkedIn, like your Chat GPT, or such similar things, or Google or your Spotify, even your music subscription, your online digital streaming platforms, your Netflix, your all the other things. So an apprehension was being raised that TCS is also applicable on such transactions. But in my humble understanding, TCS is not applicable on such transactions because such transactions do not fall under the current account permissible current account transactions under the LRS criteria. These transactions are not LRS. You are not permissible LRS transactions. These transactions will not be counted in your overall limit of $250,000 as far as LRS remittances are concerned. So while in India, if you purchase some foreign goods from a foreign website, say Amazon.com, because Amazon.in is your Indian version, but Amazon.com is your obviously USA based digital platform. So if you make a purchase from, if you purchase a book, or if you purchase some other goods from some foreign domiciled platforms while residing in India, so such remittances are not considered as LRS remittances as far as my humble understanding is concerned. So TCS is not applicable on such transactions. So that is why the definition of current account transactions becomes significant and important. International debit card or credit card, we have discussed that Rule 7 has been omitted with effect from 16th of May 2023. And why this Rule 7 was omitted, rationale or criteria which was given was that no exemption was there as far as the international spends on debit cards, international debit cards, or forex cards or travel cards were concerned. So in order to do away with this differentiating treatment vis-a-vis the mode of payment, that is your international credit card vis-a-vis other modes, the Rule 7 has been omitted with effect from 16th of May 2023. However, a threshold exemption limit of 7 lakhs has been provided, but currently this threshold exemption limit has not been provided for other modes like your forex cards, your travel cards, and your domestic debit or credit cards. Friends, another very important thing that what amplifies my understanding on the payments for purchase of foreign goods or services from India, that it is outside the purview of TCS applicability, is this screenshot from the official Twitter handle of RBI and the Ministry of Finance itself. So this you can check the Ministry of Finance official Twitter handle, and they have mentioned here that TCS is not applicable on payments less than 7 lakhs, on payments for education and medical purposes up to 7 lakhs. Obviously, we have to add that, and payments for purchases of foreign goods or services from India and business trips. But here also that I have already added that business trips undertaken by employees on behalf of employers, and if business trips are undertaken independently by proprietors, then those are covered under the TCS. In respect of employees, they themselves have clarified that does LRS cover business visits of employees? No. When an employee is being deputed by an entity for any of the above and expenses are borne by the latter, such expenses shall be treated as residual current account transactions outside LRS and may be permitted by the AD, that is authorized dealer, without any limit, subject to verifying the bona fide of the transaction. This I have already told. Friends, now coming to the most important thing, and the lesser talked about thing, because it is a painstaking thing, but I always try to face those painstaking things also. So whether this threshold exemption limit of 7 lakhs is who are the remitter or who are the authorized dealer. So I have done my research and I have spoken with several bankers on this aspect, several authorized dealers, several money changers also, and my understanding has been further amplified by a very recent tweet of the PIB fact check on its official Twitter handle. So as per this, as per my research, as per the feedbacks of the authorized dealers, as per the official version of the RBI fact check also, these exemption threshold limits of 7 lakhs in respect of LRS remittances towards medical treatment and or education abroad and or international debit credit card payments is to be considered who are the resident individual, that is the remitter, and not who are the TCS collector or who are the debit credit card. So friends, RBI factor has specified that the aggregate LRS spends of resident individuals in a financial year are compiled and monitored by RBI based on plans on such individuals. Because while we furnish Form A2, which I have discussed, it is mandatory on the part of the remitter to furnish his or her PAN. Without the PAN number, no foreign remittance can be made. And once the PAN number is given, it becomes very easy for RBI as well as for all the authorized dealers to track the aggregate LRS spends made by an resident individual in the financial year. So it cannot be a plea that how can the individual authorized bankers will come to know about the aggregate LRS spends of each resident individuals. Suppose a person is having a bank account with HDFC Bank, another is having Axis Bank, and so on. So it cannot be said that if a person is making foreign remittance under LRS up to 7 lakhs with HDFC Bank and another 7 lakhs or in anything, any excess of 7 lakhs from another banker, say Axis Bank, then it cannot be said that TCS applicability can be done away with because individual remittances or the authorized remittances are within the 7 lakh limit. This 7 lakh threshold is applicable per PAN number. The aggregate of all such LRS spends will be kept together and taken together, then the aggregate threshold 7 lakhs will be applicable, and any remittance in excess of 7 lakhs, in our example, the other foreign remittance in Axis Bank of 7 lakhs will be subject to TCS applicability. And this I have cross-verified with bankers also, with authorized dealers also. And it is another thing that some of the bankers are still not doing it, but nonetheless, in my humble understanding, very soon the penalties may follow, and therefore this threshold exemption limit of 7 lakhs is to be followed religiously per resident individual and not per bank or per authorized dealer or per debit or credit card for also. Although as far as the international credit cards are concerned, currently some infrastructure facilities or the some technical upgradation may need to be made, because currently I have been made to believe that currently the international credit card spends cannot be aggregated, but systems are in work, and very soon this threshold limit of 7 lakhs will be made applicable for these international credit cards also, apart from the education and medical treatment abroad. So as far as my understanding is concerned, if an individual makes foreign remittances towards education abroad also, towards medical treatment abroad also, or towards foreign visits while in foreign, to its international credit cards or debit cards, then the overall threshold exemption limit of 7 lakhs will apply, and not individual threshold 7 lakhs per debit card or credit card or per authorized dealer will apply. I have discussed this within an example also, my last slide. And this thing I have already discussed that the payments towards international debit cards within India are already covered under Rule 5. Friends, this subscription of various foreign domiciled digital platforms like LinkedIn, Spotify, or purchase of goods from foreign e-commerce platforms as I have discussed in my humble understanding, are outside the purview of TCS because these are not LRS remittances. The confusion has arisen because in one of the FAQ, the one passing reference has been made that I should open that FAQ itself. Yeah, here. So I read this. The notification dated 16th May 2023 omits Rule 7 of MCAT Rules 2000. In fact, it removes the exemption given to the user international credit cards for meeting his or her expenses by a person when he is abroad. Okay. Now, this is the line which has confused people. Even earlier, all current account transactions undertaken on international credit cards in India were subject to Rule 5 of FAMCAT rules and covered under Liberalised Remittance Scheme. But here also the real purport of this line is that even earlier also all current account transactions, that is the permissible current account transactions, those 8 categories of transactions uh, are being, the remittances are being made and the payments are being made towards international credit cards, then those were already being covered under LRS, even if they were being made within India. So that doesn't mean that each and every payment made to international credit card, like your purchase of goods from foreign e-commerce websites, because that is not falling in those 8 criteria, and as well as the residual criteria of current account transactions as far as LRS remittances are concerned. So this is my understanding that TCS is not applicable on such transactions. Then, friends, the payment of TCS is not a final tax. Obviously, the TCS credit is very much available to the taxpayer while he or she files his or her return. But here we should know that the rate of, if the taxpayer has no other income tax liability, and just because he has undertaken some specified transactions, and more specifically some overseas tour packages, and even a single dollar, even a 1 rupee cost will incur TCS, will be subject to TCS. And even if the overall threshold limit, if the person is claiming some exemptions and deductions and is availing the benefits of, say, suppose 7 lakhs rupees of the new regime in the new regime in the Income Tax Act, and by virtue of that is not liable to any income tax liability. But still, if even a single rupee has been incurred on overseas tour packages on or after 1st of July, the rate of TCS of 20% will be applicable on such remittances. And then the only option left with such individual is to claim a refund of such TCS by filing his or her return of income. And the interest rate on such refund on TCS is only 6%. That is half a percentage every month or part of the month. And more specifically, this interest on refund will not be provided from the date of remittance, but will be provided only from the beginning of the next financial year in which such remittance has been. So in a way, this TCS, if in case of non-return filers or in case of non-tax liability persons, this TCS is an interest-free loan given to the government. But nonetheless, having said it, the justification seems to be that where a person makes some remittances towards overseas tour packages, then the returned income has to be commensurate with such foreign spending also. So it goes both ways. So, but the fact of the matter is that TCS credit is available, just like your TDS credit at the end of the financial year by filing return of income, and the interest rate is 6%, and it is applicable with effect from the beginning of the next financial year in which remittance has been made. So friends, this example, this will clarify things. Mr. Srinivasan makes foreign remittance of rupees 5 lakhs towards medical treatment of his wife in USA on 1st of July 2023. That is the cutoff date, by exchanging equivalent USD from an authorized money changer. Friends, in this example, I have categorically considered different categories of authorized dealers, like your bankers, your money changers, your debit credit card bank issuers, as well as different permissible current account transactions within the LRS remittance. To clarify that the threshold exemption limit 7 lakh applies to all such remittances taken together and not per remittance or per authorized dealer. So first remittance of Mr. Srinivasan is towards medical treatment of his wife in USA on 1st of July of 5 lakh rupees by exchanging equivalent USD from an authorized money changer. On 31st of August, he makes further foreign remittance of 2 lakhs through his bankers towards education fees of his daughter who is studying in UK, and additionally incurs an expenditure of rupees 1 lakh towards the hostel fees of her daughter through his international credit card with so-and-so bank. Further, Mr. Srinivasan makes foreign remittance of rupees 3 lakh towards investments in US stocks through his investment banker on 30th of September 2023. On 1st of January 2024, on the new year, he books an overseas tour package of rupees 4 lakhs to Europe from a tour operator. So in all such foreign remittances he has been made. So what will be the exact TCS liability on his? So this is in the next slide. So in this example, the threshold exemption limit of rupees 7 lakhs will be considered for his LRS remittances in respect of rupees 5 lakhs towards medical treatment of his wife. Okay. Rupees 2 lakhs towards education fees of his daughter who is studying in UK. So 5 plus 2 becomes 7, and 1 lakh towards the hostel fees expenditure of her daughter. 7 lakh exemption limit is available towards medical treatment abroad as well as towards education abroad. And it is not with effect from 1st of July, it is not applicable towards any residual criteria of LRS, barring these two criteria, that is medical treatment abroad or education treatment abroad. But in our example, the LRS remittance of 1 lakh is in excess of the threshold exemption, because 5 lakhs towards medical treatment of wife plus 2 lakhs towards education fees of daughter in UK becomes 7 lakhs. So the 1 lakh additional fees towards hostel fees also, although falling in the indirect incidental things of education towards education, but still threshold exemption limit of 7 lakhs has been crossed. So this 1 lakh will be subject to the TCS at the rate of 5%, and the TCS amount will be 5,000. So exemption threshold limit of 7 lakhs will not apply on all such remittances individually. That is 5 lakhs towards medical treatment, or 2 lakhs towards education fees, or 1 lakh towards hostel fees. The threshold exemption limit will be applicable in aggregate of all such remittances. And otherwise, this was about LRS remittances. Continuing with this example, the remittances of Mr. Srinivasan of rupees 3 lakhs towards investments in US stocks and overseas tour package of 4 lakhs will be liable for TCS collection at the rate of 20%, since these remittances have been made on or after 1st of July 2023. Therefore, the higher TCS rate of 20% will be applicable. That is 60,000 in respect to 80,000. That is the rate of 20% on such remittances, either at the time of remittance or at the time of bill raising by the authorized dealer, whichever is earlier. In case of forex cards, the upfront remittance is being collected, so the TCS is collected upfront. But in case of credit card settlements, I think that the credit card settlements are being done at the time of credit card settlement bill invoices. So the TCS collection triggering point arises on raising of invoice by the authorized dealer or at the time of credit card settlements of such bills. Because these banks mark up their statements by adding TCS and by other thing also, like GST and your foreign exchange. So friends, and in continuing with this example, Mr. Srinivasan can take the credit of his total TCS amount of 1,45,000 while depositing his advance tax and self-assessment tax as per his return of income for the financial year 23-24, or can claim a refund of this amount if there is no income tax liability. However, interest on such refund will be calculated only from the beginning of next financial year 24-25 till the grant of such refund. This I have already discussed. So now, friends, coming to the question answers, I should take up the questions. I hope that some of the questions I have already covered, but let us proceed. I believe that prepaid forex card purchased by a company from a bank and issued to its employees traveling overseas is not covered under TCS. This question is by Anjani Ketan. In my humble understanding also, and as per the clarification given by the Ministry of Finance itself, that such prepaid forex card purchased by a company and issued to its employees is outside the purview of TCS, subject to the bona fide of the transaction that such purchase has been strictly made towards the business objectives of the employer company only, and not towards the personal foreign travel of the employees. So the bona fide of such transactions need to be established through the authorized dealer. Second question, again similar question by Anjani. If a company get corporate credit card issued to its employees exclusively for office use, is it also covered under TCS? It is not covered, but again subject to the bona fideness of the transactions. If an employee has his personal credit card and the employer also issues a corporate credit card to that employee, how does the 7 lakh limit work? Obviously, there are challenges, there are practical challenges, and the corporate credit card, obviously, the corporate credit card distinction can very well be established. Only the personal credit card transactions will be subject to the 7 lakh limit. The corporate credit card is outside the purview of TCS applicability, so the 7 lakh limit will not get exhausted as far as the spends in corporate credit card is concerned. It is my humble understanding. Coming to the next question. Is it that the bank will add the TCS amount in the monthly account statement where applicable and recover from an individual, and then the individual can claim the TCS so paid in his income tax return? Again by Anjani. Yes, I have already discussed this thing that by and large, at the time of settlement, the authorized dealers raise their invoices and collect the TCS amount. But majority of such transactions, the TCS collection takes place at the upfront time only, upfront remittance of TCS only. So when they collect the TCS, then within 7 days of the following month, such authorized dealers or banks are duty bound to deposit these TCS amount within the exchequer or the treasury under the plan of the respective resident individual remitter. So just like your TDS credit, this TCS credit will get reflected in your 26AS forms and your AIS also. And in case of any discrepancy, then you have every right to discuss this thing with the authorized dealer, that in case he has defaulted in furnishing of TCS returns, just like your TDS returns, the TCS returns are to be furnished by and uploaded electronically by the respective authorized dealers on quarterly basis, and TCS has to be deposited within 7th of the following month. So TCS credit is very much available, just like your TDS credit, and it gets reflected in 26AS. Raju PC, sir, is TCS applicable for business trip also? I have discussed this thing that for business trip undertaken by employees on behalf of employer, then such are outside the purview of TCS. But currently, the language of the current account transaction covers business trips undertaken by the businesses, proprietary businesses in their individual capacity. So TCS is applicable. Although being a professional myself, I feel that this differentiation should be removed and business trips should be kept outside the purview of TCS. But this is my wishful thinking only. Anonymous attendee, overseas tour package cover only overseas hotel bookings and not tour packages. No, overseas tour packages cover each and everything. The definition of overseas tour packages is very clear, and it is very much given in the section 206C1G itself, and it covers hotel booking and tour package, covers everything. But again, the dicey thing is that if a tour package is being purchased, then TCS becomes applicable. But if separate individual hotel bookings are being done through some websites, then I think that TCS is not applicable currently. Non-residents having income in India takes income to residing for self-maintenance, TCS will apply. Takes income to residing country for self-maintenance. I think TCS will apply because resident individuals, okay, this is a dicey thing because section 206C1G talks about resident LRSs are being made by resident individuals only. So although section 206C1G does not talks about resident individuals, but LRS remittances are towards residents only. So this thing I will clarify myself and will let you know it through. You can raise this query in my email also. Okay, I will try to answer this. Whether living expense, but here I would like to add here that there was some relaxation being given to foreign tour operators who purchase overseas tour packages by Indian tour operators. So TCS was not applicable on such foreign overseas tour packages purchased by foreign tour operators from Indian tour operators. So I think that such relaxation may be there, but nonetheless, I will clarify this further. whether living expenses related to education and medical will suffer TCS at 5% or 20%. I have discussed that TCS at 5% will be applicable, but subject to the establishment that such living expenses are strictly and exclusively towards education or medical treatment alone and not for any other residual purpose. So documentary evidences are needed to be furnished. Then, of course, 5% rate will be applicable. In case my foreign, by this question is interesting question, Bajrang Lal Agarwal ji. In case my foreign tour books now and paid 5% TCS, but actual travel will take place after July 2023. As per new rule, do I have to pay 20% TCS? As I have already mentioned that the trigger TCS triggering point is earlier of the two, that is either at the time of remittance or at the time of booking or raising of invoice, whichever is earlier. So in such cases, I suppose that the remittance is will be earlier than 30th of June. So the relaxation concessional rate of 5% may be availed of, and you can be benefited by such. Okay. The actual traveling of foreign travel is not relevant, but yes, of course, the travel spends while on a visit abroad through your international credit or debit cards, overall subject to the overall exemption limit of 7% or 7 lakhs will be subject to 20% TCS if the foreign travel is on or after 1st of July 2023. If TDS is deducted by a company, then TCS is not applicable. Yes, TCS is not applicable. TCS under section 206C 1G is applicable only in respect of remittances, foreign remittances made by resident individuals only, and not for any other assessee, be it your HUFs, be it your corporate partnership firms, LLPs. It is only applicable to resident individuals. Ethan Shoy is saying, thanks, sir. Very nice PowerPoint presentation. A request to the host and panelists to send copy of PowerPoint presentation. Okay, this will be shared. Then again, anonymous attendee is asking that, what if employee makes personal expenses on business trip to debit credit card? Yes, this is a dicey thing, friends. The practical challenges are always there. If the employee makes personal expenses, then obviously going strictly by the language and the intent, such personal expenses will be covered under TCS provisions. So again, I think that very soon, just like your other remittances, your debit card and credit card payments, remittances will also require you to furnish an upfront furnishing of Form A2 to the banks. They will ask for the same, because banks will not take the risk of because they will be at the consequences of not deducting that TCS. Okay, so they will make sure that they will be conservative in collecting the TCS, and the onus will be on the respective individual to prove that such expenses are your business expenses and not your personal expenses. Okay. Non-resident Indians outside LRS and TCS. Outside LRS, I have said that outside LRS scheme, non-resident individuals are outside. It is only applicable to resident individuals. But TCS, I also, my inclination is that since section 206C 1G remittance talks about LRS remittance only, they and foreign tour operators have also already made outside the purview of TCS. So non-residents, I think, may be outside the TCS purview. But I will clarify this once again and will mail the clarification. Whether payment made for visa charges to foreign embassy directly by the person through own credit will be liable for TCS. I don't think it will be liable, because I don't think it is covered under LRS thing. But again, the purpose of these okay, it is towards visa charges, na? So the purpose of your trip, a foreign trip, will be instrumental in determining the applicability of TCS or not. Okay. Yeah, this is again a good question. But whether an employee can request the employer to consider TCS on education expenses or medical remittance? If yes, then how? Friends, strictly speaking, it can be done, but nonetheless, as the TDS is also concerned, the employer deducts TDS irrespective of the fact that your advance tax payment is there or your self-assessment tax is there. Self-assessment obviously comes at a later point, but TDS is being deducted by the employer based on your declaration and investment declaration and the TDS credit is not being given. Similarly, the TCS credit will practically will not be given by the employers. Okay, so they will not take that risk. So practically speaking, I don't think that TCS credit in the employer company will be willing to give while deducting TDS on your salary. But yes, while paying advance tax or while paying self-assessment tax, this TCS credit is very much available, just like your TDS. What about prepaid credit cards for overseas expenditure made in personal travel? Yes, that are now subject to the purview of TCS, subject to the overall limit of 7 lakhs. But if the prepaid credit cards payment is being made in India, then obviously the threshold exemption limit, I think, will not be available. Will TCS apply on ESOP, considering that TDS will be deducted on ESOP treated as perquisite? Friends, our today's session is strictly in respect of section 206C1G and not towards ESOP. Okay. And as far as my understanding is concerned, TCS is not applicable on perquisite, and it is only applicable either in purchase of motor car in excess of 10 lakh rupees or some specified businesses like your alcohol, liquor, timber, and in purchase or in excess of 50 lakhs. So in my humble understanding, TCS in any case is not applicable on any perquisite, either ESOP or any other thing. Foreign currency purchase in USD from forex dealers, TCS applicability? Yes, it is very much applicable. And foreign currency purchase in USD from forex dealers for travel purpose, TCS applicable? Any limit? Again, the limit will depend upon the purpose of your travel. If it is towards education or medical treatment abroad, then obviously the threshold exemption limit of 7 lakhs will be applicable. But for any residual criteria, no threshold exemption will be applicable. Whether TCS is applicable if seller agent is issuing ticket for overseas and payment is made in INR in India, yes, it will be applicable. It is also again a good question that in some quarters it has been suggested that if the payment is being made in INR and not in foreign exchange, then TCS may be avoided. But this is not so, friends. Let me be very clear. TCS will be applicable even if the payments are being made in INR, because the LRS remittance itself, the master direction of RBI itself made it very clear that irrespective of the mode of payment, whether it is in INR or in foreign exchange, the LRS remittance will be, the limit of LRS will be applicable, and so does the TCS limit. If the employer is sponsoring personal visit to employee, the TCS credit will be given to whom? The TCS credit will be given to whom? Obviously, the banker, if the employer is sponsoring personal visit and if the TCS is being directed, but nonetheless, I don't think that if the employer is directly making the payment to foreign exchange dealer of such thing and sponsoring the employee, then again it is a tricky question. But going by my inclination, the TCS applicability should be on the respective employee only, and TCS credit should be applicable on the PAN number of the employee only, and because this is a benefit given to the employee. But okay, then again it is a tricky question that employee is himself not bearing any costs, and why should TCS credit will be given? I will check myself. This is again a very tricky question. I will check myself, try to answer it in my subsequent email. Then the last question is there a trade-off between TCS and capital gains on sale of shares and bonds and securities? TCS on capital gains on sale of shares. Friends, TCS credit is applicable just like TCS credit is applicable and can be availed of just like your TDS credit. So either the gain on capital gains or any other income, the TCS credit will be applicable just like your TDS credit. Okay. So with this, I think that I have answered all the questions. As far as the two specific questions are there, that whether the TCS credit will be given to whom, either the employer company, if the travel is being sponsored by the employer company, and whether TCS provisions are applicable to non-residents. I will try to figure this out, and will very soon will try to answer this through my emails. Okay. So apart from these, I have answered all the questions, I think. So with this, I have concluded my presentation, and apart from this, if further any query or question or anything to share is there, I will be happy to listen. Thanks.